If you've ever had the fever to lever your portfolio, or decided to go short when other people are going long, then you probably know the Direxion funds. Today we're going to talk to Sylvia Jablonski, Managing Director of the Direxion funds, about using leverage and also about some new products that they've got in the pipeline.
The levered and inverse ETF products that we're best known for are the 3x bull and bear ETFs, which are known for short-term tactical trading opportunities. They're for clients looking to express market opportunities, to hedge, to look for volatility trades, and they're very tactical and short-term in nature, but they're powerful tools to get leverage exposure to an underlying index. Some of the products that we've been talking about in the past or most recently have been our newly launched lightly levered ETFs, inverse ETFs, and strategic beta funds, which tend to be more popular with the retail community. KNOW is the Direxion Insider Sentiment ETF, and it's a great product. And the reason why is because it allows the retail advisor to trade alongside of corporate insiders. So the way that it works is that it tracks a Sabrian all-cap analyst quant-weighted index. And what it does is essentially picks the top 100 names from the S&P 1500 of corporate insider purchases and positive analyst rankings. So earnings revisions, growth valuations, positive upward movement and opinion on a particular stock. So with those two factors, we're really giving advisors a sense and the opportunity to trade alongside corporate insiders, which we know, as Peter Lynch once said, there's a lot of reasons why people sell their equities, but there's usually one reason why they buy, and it's because they think the price is going up. So KNOW is rebalanced monthly, and past performance is never indicative of future results, but it's certainly had a very impressive performance. Since launch, it's been up over 90%. Last year had a great year, up 5%, and it's in line with the S&P 500. So it's just a great way for advisors who are looking for large cap, multi-cap blend exposure or smart beta alpha generating ideas to use the ETF. Going back to the inverse ETFs, one great idea for advisors, whether retail, institutional, or otherwise, would be ticker SPDN. It's an inverse S&P 500 ETF. We saw a lot of volatility coming into the markets in the beginning of 2016. We were down about 10% mid-February. Equities rallied, stock markets came back to all-time highs. Then we had poor jobs numbers, we had Brexit. So there's a lot of uncertainty. Markets are searching for equilibrium, and advisors are worried. And at Direxion, we sort of say, worriers welcome. We have these inverse funds. They're negative 1x, priced at 45 basis points. And if you're an advisor or retail client that doesn't have a 5% margin account, doesn't trade options, and is looking for a way to hedge a portfolio, there are great tools to do that. The other idea there is just simply taking advantage of downturning markets. So expressing an opportunistic trade by way of, I think financials are going down, energy is going down, S&P 500 is going down. So everyone has S&P 500 exposure to some degree. If you use SPDN, you can benefit from the downward movement of the index or essentially hedge out your risk.